Hello, friends. Welcome back to the channel. I hope you're ready to level up your trading game like never before. If you've ever stared at candlesticks, feeling lost, second-guessed every trade, or wished you could truly read the market instead of blindly following indicators, then today's book is going to change the way you see the charts forever. We're diving deep into YTC Price Action Trader, an absolute masterpiece for anyone who wants to understand how markets really move, how to spot traps and opportunities, and how to think like a pro trader. It's not just about setups, it's about mastering context, sharpening your mindset, and building a trading style that's truly yours. So grab a notebook, open your charts, and get ready to absorb lessons that most traders never learn. And hey, if you find value in this journey, don't forget to like, share, and subscribe to the channel. It means the world to me and helps bring more practical trading wisdom to everyone who dreams of trading with clarity and confidence. All right, friends, let's get started. Your next level in trading starts right here, right now. Chapter 1, Introduction. Hello, dear traders. Today, let's begin our journey into the mind of Lance Beggs with the very first chapter of YTC Price Action Trader. This opening sets the stage for what makes this material stand out from the countless trading books out there. Right from the first pages, Lance Beggs makes one thing crystal clear. Trading is not about finding a magic indicator or a foolproof system that spits out perfect buy or sell signals. Instead, trading is about understanding the market's story, about reading the market's intentions, adjusting to new information, and making confident decisions based on context. Beggs shares a truth that many new traders overlook. The market is uncertain and always will be. No strategy can remove that uncertainty. Successful traders do not try to predict the future with certainty. Instead, they learn to manage uncertainty better than others. They accept that losses are part of the game and focus on playing the probabilities consistently. He then explains why he wrote this series. His aim isn't to hand over a rigid rulebook, but to guide us in developing the skills to become self-sufficient discretionary traders. It's about becoming our own trading coach. Someone who doesn't blindly follow setups, but instead understands why a setup exists, whether the context supports it, and how to react if the market changes unexpectedly. Beggs lays out the boundaries of what this series covers and what it doesn't. He stresses that while the strategy is explained in detail, it's not a plug-and-play system. Instead, it's a framework. Think of it like learning a language. Once you know the vocabulary and grammar, you can communicate fluently. Here, once you understand price action principles, you can trade any market in any time frame with confidence. He clarifies that this approach works best for markets that offer sufficient liquidity and volatility, Forex pairs, index futures like the E-mini, and highly liquid stocks. The time frames? He recommends short-term intraday charts, typically a higher time frame like a 5-minute chart for context and a lower time frame like a 1-minute chart for execution. But again, this is flexible. If you prefer higher time frames or swing trading, the core principles still apply. Beggs also reminds readers that the goal isn't to trade all day long or catch every move. It's about identifying where the best opportunities exist during the day, usually at points where other traders are making mistakes or exiting positions in panic. By understanding market structure and order flow, you can spot these traps and capitalize on them. A powerful point in this section is about mindset. You are not here to predict the market perfectly. You're here to find and exploit edges. Small edges, played out repeatedly with discipline, create long-term profitability. This mindset shift separates amateurs from professionals. Lance Beggs takes a humble pause to express gratitude to the traders, mentors, and communities who shaped his thinking. He acknowledges that no trader evolves alone. His respect for the broader trading community reflects in his writing. He wants readers not just to copy his style, but to evolve it, test it, question it, and make it their own. He also thanks his family for their support, reminding us that trading success often demands time, sacrifice, and understanding from loved ones. It's a subtle but important lesson. Behind every focused trader, there's usually a strong support system, whether it's family, friends, or a network of fellow traders. Chapter 2, Principles of Markets. Lance Beggs opens our eyes to what's really happening behind every tick, candle, and swing we see on the chart. a reality that most traders never fully grasp, but absolutely must. Right from the start, Beggs stresses that the market is not a machine that spits out predictable outcomes. It's a living crowd of traders acting out their beliefs, fears, and greed. Every movement we see is simply a visible trace, a shadow, of this battle between buyers and sellers trying to outsmart each other. Once we accept this, we stop wasting time chasing a perfect prediction tool and instead focus on reading the clues left behind in price action. He explains that price is nothing but an agreement where a willing buyer meets a willing seller. The more buyers there are compared to sellers at a price, the more upward pressure builds until balance is found again. This never stops. It's an endless dance of imbalance and equilibrium, cause and effect, that pushes price up, down, or sideways. Many traders lose money because they fail to see this. They trust indicators or rigid systems, assuming past patterns must repeat exactly. But markets evolve minute by minute. So instead of memorizing patterns like a robot, Beggs teaches us to read the underlying struggle. Where are traders trapped? Where is fear or greed strongest? Where might stops trigger that cause sharp moves? These questions matter far more than any indicator's color change. He drives home the uncomfortable truth. Trading is hard, and losses are unavoidable. But what separates pros from amateurs is how they handle this fact. Pros think in probabilities. They know they'll be wrong often, but make sure losses are tiny and winners are bigger. Amateurs hope to avoid losses altogether. An impossible dream that leads to blown accounts. Beggs then talks about the difference between ineffective and effective trading approaches. Many fail because they rely too much on signals and neglect context. An indicator may flash buy, but if the broader market structure doesn't support it, the trade fails. Effective traders flip this around. They understand the bigger picture first. Is the market trending strongly? Are we in a range? Is price testing a key level where other traders might panic? Only then do they decide whether any signal is worth trusting. The backbone of his method is context. Before you trust a candlestick pattern or a trendline break, you must know where you are in the broader story. Are you trading with momentum or against it? Are you entering where weak hands might exit? This mindset makes a huge difference. It turns random setups into powerful opportunities. Beggs also highlights a crucial attitude shift. Stop aiming to catch every move. The market doesn't care about your wishes. Focus instead on high-quality setups where you see other traders making mistakes. These are usually the best places to enter, where panic exits or breakout traps fuel sharp price moves in your favor. To trade this way, he reminds us to always plan for being wrong. Before entering a trade, know exactly where you'll exit if the market disagrees. This protects your capital and keeps you in the game long enough for your edge to work over time. The real magic, he says, isn't a secret indicator. It's the skill to read the chart's story as it unfolds. It's being able to sense where buying pressure fades, where supply steps in, and where late traders might be squeezed out. This is why screen time, journaling, and honest review are vital. You don't become a master chart reader by luck. You build the skill trade by trade, mistake by mistake, lesson by lesson. Chapter 3, Market Analysis. It's time to build on what we've learned so far and step into the trader's real battlefield, chart analysis. In this chapter, Lance Beggs teaches us not just what to look at, but how to think like a skilled market analyst. He breaks down how to see the bigger picture through multiple timeframes, how to mark meaningful support and resistance, and how to read trends and structure with a trained eye, so you stop reacting blindly and start anticipating with purpose. Beggs begins by reminding us, most traders stare at one chart in one time frame, expecting to find hidden riches, but price movement is fractal. Patterns repeat across different time frames. This means a 5-minute breakout might fail if a strong resistance on the hourly chart sits right above it. So he insists we must zoom in and out, always blending at least 3 views: a higher time frame to find the major trend, a trading time frame for setups, and a lower one for precise entries and exits. This multi-time frame approach keeps you aligned with the flow instead of fighting it. Next, he talks about marking up charts properly. It's not about cluttering your screen with lines everywhere. It's about highlighting key zones where traders are likely to act. Support and resistance are more than static levels. They are zones where price has repeatedly paused, reversed, or broken through with force. Knowing where these zones are helps you anticipate likely reactions, bounces, breakouts, or traps that shake out weak hands. Beggs stresses that real market structure isn't just trend lines and channels. It's about swings. Uptrends are clear when you see higher highs and higher lows stepping up smoothly. Downtrends show lower highs and lower lows cascading down. But the real skill is in spotting when this structure shows signs of changing. Subtle hints like shallower pullbacks, failed breaks, or sudden surges in the opposite direction. These signs tell you the balance of power is shifting. Your chance to prepare for a reversal or a breakout continuation. One of the most powerful parts of this chapter is Beggs' guidance on reading strength and weakness directly in price action. For instance, a strong rally should push easily through resistance. If it stalls or keeps pulling back deeper each time, that's weakness. Similarly, watching how price reacts after a breakout reveals whether traders are committing or bailing out. This real-time feedback is priceless. It shows whether the story unfolding matches your expectations. To help traders put this into practice, Beggs provides clear checklists. Before taking any trade, you should ask, what's the trend on my higher time frame? Where are my key levels? Is price showing signs of strength or exhaustion near these zones? How clean is the path to my target? Are there obstacles in the way? By answering these questions consistently, you build a habit of objective, disciplined analysis, the exact opposite of emotional guessing. He also highlights the importance of context over patterns. A candlestick pattern alone means nothing without knowing where it occurs. A pin bar at a random spot is noise, but a pin bar rejecting a strong resistance zone during a pullback is gold. This way, patterns support your narrative. They don't dictate it blindly. Beggs wants traders to think of their chart as a story unfolding bar by bar. Each swing high and low, each rejection or breakout adds another sentence to that story. Your job is to read it in real time, adapt your plan as new clues emerge, and stay aligned with what the market is telling you, not what you hope it will say. Chapter 4, Strategy. Beggs begins by pointing out a truth many traders ignore. A signal is meaningless without context. You can't just take every pin bar or breakout blindly. The edge comes from reading the bigger picture first. What's the trend? Where is price in relation to key support and resistance? Where might other traders get trapped? Only then does a pattern or setup have real value. He groups his setups into 3 broad types: trend continuation, trend reversal, and range trading. For trend continuation, he looks for price pulling back after an impulse move, ideally back to an area where buyers or sellers are likely to step in again. These pullback trades are his bread and butter. Low risk, high reward if you're patient enough to wait for them. Next are reversal trades. These happen when a trend is exhausted. Maybe the pullbacks get deeper, or new highs fail to push strongly. Here, he watches for traps where breakout traders get caught just before the market snaps back the other way. These reversals require more skill because you're going against the recent momentum, so context and confirmation matter even more. The third type is range trading, when the market isn't trending but bouncing between support and resistance. Many traders get frustrated by sideways markets, but Beggs shows how to profit from these too. By identifying the range boundaries, you can fade the edges, buying near support and selling near resistance, as long as the range holds. Once the setups are clear, Beggs dives into risk management. He's brutally honest. The best entry means nothing if you don't control risk. Every trade must have a logical stop-loss placement, usually just beyond a level that, if broken, proves your idea wrong. This protects you from big losses when the market does the unexpected, which it often will. Profit targets come next. Instead of hoping for huge wins every time, Beggs encourages aiming for the next logical area where opposing traders might step in. For example, a prior swing high or low. This realistic approach locks in profits consistently and avoids giving back gains due to greed. Trade management is another pillar of his method. A trade doesn't end when you click buy or sell. He teaches how to adjust stops, scale out profits, and exit early if the market tells you your edge has vanished. Flexibility is key. Stick to your plan, but read the evolving price action and manage risk dynamically. To tie it all together, Beggs provides a clear trading process diagram, a visual step-by-step that shows what to check before, during, and after each trade. This includes preparation, executing entries, managing trades in progress, and reviewing results afterward. By following this loop, you build discipline and turn mistakes into valuable lessons instead of repeated pain. A practical checklist reinforces this process. What's the higher time frame doing? Where are the key levels? What's the current bias? Trending or ranging? Where will you enter, exit, and adjust? This simple routine trains you to trade mindfully rather than emotionally. After all the theory about context, setups, and trade management, Lance Beggs now brings it alive on real charts, showing you exactly how he reads, plans, enters, manages, and exits trades in the heat of the market. This is where the book shifts from knowledge to application, and every trader loves this part. Beggs opens this chapter with a reminder. There's no perfect trade. Even a well-planned trade can lose money if the market shifts unexpectedly. What matters is how you handle each scenario, whether you win big, scratch for break-even, or take a small loss and move on calmly. These examples show that reality clearly. He begins by breaking down a winning trade in detail. You see how he starts by scanning the higher time frame, identifying the bigger trend and important zones. Then he zooms into his trading time frame, waiting patiently for price to pull back into an area where trap traders might fuel the next move. When the conditions align, he pulls the trigger with confidence, places a stop loss beyond the logical failure point, and sets a target at the next resistance. Once price moves in his favor, he explains how he locks in profit, adjusts stops, and rides momentum, all while staying prepared to exit if the market shows weakness. Next, Beggs shows an example of a break-even trade. Many traders overlook the power of scratching a trade when the story changes. Here, he shares how a setup looked perfect at first. A pullback entry lined up with trend continuation. But soon after entry, the price stalled and gave subtle clues that buyers weren't stepping in strongly. Instead of hoping and praying, he reacts fast, tightens his stop, and exits for a small loss or break-even. He explains that break-even trades protect capital for the next opportunity. They're a sign of skill, not failure. Then, Beggs doesn't shy away from showing a losing trade, something rare in trading books. He wants traders to see that losses are normal and part of the plan. In this example, everything aligns nicely: context, level, and price pattern. But right after entry, the market flips unexpectedly due to fresh news or sudden momentum against him. The trade stops out exactly where it should, at the point that proves the setup failed. Instead of feeling bad, Beggs highlights how sticking to a stop saves you from bigger damage. He teaches traders to accept losses without drama and focus on executing the next trade well. One of the most powerful lessons here is how he adapts when conditions change. In one example, he plans a breakout trade. But as price approaches the breakout point, he notices signs of absorption. Big players selling into the breakout attempt. Instead of forcing the trade, he cancels the entry and avoids a trap. This shows the core principle: flexibility beats stubbornness. Markets evolve every second, and your job is to adjust accordingly. Throughout these examples, Beggs emphasizes journaling. After each trade, win, loss, or break even, he encourages you to note what worked, what failed, and what you do differently next time. This habit builds true expertise over time because patterns of mistakes and strengths become clear. It turns you into your own best teacher. He also highlights common trader emotions during these trades: fear of missing out, doubt before clicking buy, temptation to move stops, or greed to hold too long. By showing how he deals with these feelings, sticking to his plan and trusting his process, Beggs proves that mindset is just as vital as strategy. Other markets, other time frames. Congratulations for sticking through the core chapters. By now, you understand Lance Beggs' entire approach to reading price action, planning trades, and managing them with discipline. But you might be wondering, does this really work only on the market or time frame he uses? Or can it work on other charts too? That's exactly what this chapter answers. Beggs starts by addressing a big misconception: that a strategy is only valid for a specific market or time frame. Many new traders get trapped hopping from one perfect system to another, hoping to find the holy grail for Forex, stocks, or futures. But Beggs shows that when you learn to read price action properly, understanding how traders behave, where they're trapped, and how trends develop, you gain an edge that works anywhere. To prove this, he walks through how the YTC Price Action Trader method adapts to different markets like Forex pairs, futures contracts, and even individual stocks. He explains that while each market has its quirks, Forex might trend strongly during certain sessions, stocks may gap overnight, futures can spike during news releases. The core principles never change. Price still moves because of supply and demand, traders still get trapped, and levels of support and resistance still hold power. He uses examples to demonstrate how he tweaks his approach slightly to suit the personality of each market. For instance, Forex pairs like EUR/USD often respect levels cleanly and trend smoothly during major sessions. So for Forex, you might lean more heavily on trend continuation setups during active market hours. Futures, especially the index futures, can have bursts of volatility, so managing risk and reacting quickly is key. Stocks may have explosive moves right at the open, so understanding gaps and pre-market levels becomes vital. Next, he talks about timeframes. Many traders ask whether the YTC approach works on 1-minute charts, 5-minute charts, or even daily and weekly timeframes. Beggs reassures us that it does, because price structure is fractal. A swing high and low look the same whether you zoom into seconds or out to days. What matters is how you adapt your mindset and expectations. On lower timeframes, decisions must be fast and precise. You might take more trades in a session, but for smaller targets. On higher timeframes, you get fewer setups, but bigger moves and more time to think. Some traders might use the YTC method for intraday scalping. Others may apply the same ideas for swing trading, entering on a daily chart and holding for days or weeks. The principles are identical. Read context, identify zones, wait for trapped traders, execute with discipline. Beggs makes it clear, though, switching markets or timeframes means you must practice on that new chart until you understand its rhythm. Don't expect to switch from a Forex 1-minute chart to a daily stock chart overnight and have the same intuition. The core method stays the same, but your experience and feel for each market grows with deliberate practice. He encourages traders to pick one market and timeframe first, master it deeply, and only then experiment with variations. Many traders fail not because the method is wrong, but because they spread themselves too thin, watching too many charts or timeframes at once without truly understanding any of them. Chapter 7, Money Management. Beggs opens by reminding us that all traders face losing streaks, no exceptions. You can have a fantastic edge, sharp chart reading, and flawless setups, but some trades will still lose. The market is unpredictable by nature. So, how do you make sure one bad run doesn't wipe you out? By having a solid money management plan that takes care of your capital, especially when luck is not on your side. The first building block is risk control. Beggs explains that before entering any trade, you must know exactly how much you're willing to lose. He suggests risking only a small fixed percentage of your account per trade, usually around 1% or even less for new traders. This means that even after a string of losses, your account stays alive long enough for your edge to play out and profits to come back. Next, he talks about position sizing. This is where most traders go wrong. They pick random lot sizes or contract numbers without calculating how it fits their stop loss. Beggs teaches you to work backwards. Start with your dollar risk, define a logical stop-loss distance on the chart, then calculate how many lots or shares that risk allows. This makes every trade equal in risk, no matter how big or small the stop distance is. It brings consistency and removes the emotion from deciding how much to trade. Beggs also touches on the psychological safety this provides. When you know you can only lose a small acceptable amount, you're more confident placing trades. You won't panic over a single loss, nor will you sabotage a trade by closing it too early out of fear. Another key idea is managing drawdowns, those stretches where your account balance dips lower than its peak. Beggs explains that drawdowns are inevitable. No trader, not even professionals, has a perfect upward equity curve. What separates winners from losers is how they react. Without good money management, traders double down after losses, hoping to win it all back fast. A dangerous habit that usually ends in blown accounts. Beggs shows how a calm, steady approach, sticking to the same risk size, avoiding revenge trades, and focusing on process, keeps drawdowns shallow and recovery quick. He also warns about over-leverage. It's tempting to think bigger positions mean bigger profits, but in reality, big positions magnify mistakes and wipe out accounts faster than anything else. His advice is simple. Think about survival first. If you survive, you can always grow your account slowly and compound profits over time. If you blow up, it's over. Beggs ties money management back to the bigger picture, consistency. The goal is not one lucky big win, but a long series of small, manageable wins and losses that add up over hundreds of trades. This gives your edge time to shine. You'll see patterns, improve your execution, and let probability work in your favor. Before closing, he offers a practical tip. Review your risk and position sizing rules regularly. As your account grows or your skill improves, you may adjust risk slightly, but always within safe limits. This keeps you disciplined and adaptable. Chapter 8: Contingency Management. By now, you know how to read charts, spot opportunities, manage risk, and protect your capital. But real trading doesn't always go according to plan. Sometimes, the unexpected hits you right in the middle of a trade. Your internet drops, your broker's platform freezes, or you get so stressed you can't think straight. To survive these surprises, every trader needs strong contingency management. Lance Beggs explains that trading is full of uncertainty, not just in price movement, but in everything around it. Technology can fail at the worst moment. Power cuts, hardware crashes, or sudden loss of internet can turn a good position into an unmanaged disaster if you're not ready. Emotions can also blindside you. A big loss can shake your confidence so badly that you break your rules, revenge trade, or freeze up when it's time to act. Smart traders don't just hope bad things won't happen. They prepare for them in advance. Preparation turns fear into calm control. That's the heart of contingency management. One key element is having a backup plan for your hardware and internet. Imagine being in a winning trade and suddenly losing your connection. Panic sets in if you don't have a way to act fast. Beggs suggests every trader should have a written plan pinned near the desk. A secondary internet source like mobile data, a backup laptop or tablet ready to run your trading platform, and your broker's direct phone number saved in your contacts. If all else fails, you can call the broker and close the trade manually. Next, think about power failures. For some traders, a simple uninterruptible power supply, UPS, can buy enough time to close positions safely. Others keep a battery-powered hotspot to switch networks instantly. These tiny details save your account when technology misbehaves. But hardware and internet aren't the only surprises. Sometimes, the trader themselves becomes the problem. A big unexpected loss, a sudden spike of fear, or a rush of anger can push you to abandon your plan and make reckless choices. That's why contingency management includes a plan for emotional breakdowns too. Beggs recommends a simple but powerful tool. If you feel overwhelmed, stop trading immediately. Get up, step away from the screen, breathe deeply, and calm down. Only return when you feel steady and logical again. No chart, no signal, no profit is worth risking your mindset for. If you need more time, take the whole day off. The market will still be there tomorrow. He also encourages writing clear rules for handling surprises. For example, decide in advance what to do if you lose 2 trades back to back. Maybe take a break for 15 minutes or close the computer for the session. Create step-by-step instructions for how to recover when your system fails or when your confidence collapses. Practicing these responses beforehand turns panic into a calm, automatic routine. Contingency planning builds resilience. Instead of fearing what could go wrong, you trust your backup steps. This mental safety net reduces stress and helps you stick to your main trading plan without second-guessing. Beggs reminds us that even the best prepared traders can't prevent all surprises. What matters is controlling the damage when surprises strike. A sudden loss should never be big enough to destroy weeks or months of good trading. By cutting it short and resetting your focus, you protect your edge and keep yourself in the game. In the bigger picture, this practical safety net supports everything you've learned so far: price action reading, setups, trade management, money control, by ensuring you're always in the right state of mind and environment to use your skills properly. It completes the circle of professional trading discipline. Chapter 9, Goals and Targets. Lance Beggs makes one thing clear. Too many traders fixate on profits. They write goals like, make $10,000 this month, or double my account in 3 months. But markets don't care about our wishes. What we can control is our behavior, our decisions, and our process. So Beggs shows us how to set goals that focus on what we do, not just what we get. He breaks goals down into 3 layers. First, performance goals. These are outcome-based, like profitability and win rates. It's okay to have them, but don't stake your confidence on them alone, because results can vary wildly from week to week. Second, and far more important, are process goals. These keep you focused on your method. For example, did you follow your trade plan exactly? Did you avoid impulsive trades? Did you exit according to your rules? These are actions within your control, regardless of whether a trade wins or loses. Third, learning goals. These fuel growth. Maybe you want to master a new setup, get better at reading trapped traders, or refine your exit strategy. Such goals make sure you never stop improving. Beggs encourages writing goals clearly and realistically. Start small. It's better to consistently hit modest targets than to constantly fail at huge ones. For instance, instead of aiming to win $500 every session, aim to execute every trade with perfect discipline for a week. Or instead of trying to catch every market move, aim to flawlessly follow your stop-loss rules for 10 trades in a row. These simple wins build confidence like nothing else. Tracking progress is crucial. Beggs suggests keeping detailed records, not just profit and loss, but notes on whether you met your process targets. Did you stick to your planned entries? Did you follow your contingency plan when a surprise hit? Did you avoid revenge trading after a loss? Honest tracking shows you what's working and what needs more focus. Celebrating milestones matters too. Trading can feel lonely and grueling if you wait years for a big payout to feel good about yourself. So reward yourself for the small victories, a week of flawless execution, a month with no revenge trades, or a big breakthrough in reading price context. These moments keep your motivation alive and remind you how far you've come. Another powerful point is adjusting goals over time. As you grow, your skill level changes, the market changes, and your life circumstances shift. So revisit your goals regularly. Don't cling to an old target if it no longer makes sense. Flexible goals keep you realistic and balanced, pushing you to grow but never pushing you off the edge into frustration or burnout. Beggs also explains how realistic targets protect you from overtrading. Many traders feel pressured to make up for lost time or lost money. This leads to forced trades and bigger risks. Clear, process-driven goals cut through this pressure. You always know exactly what a good trading day looks like, not just dollars made, but rules followed and mistakes avoided. Ultimately, meaningful goals align your mindset with professionalism. They keep you calm during rough patches and grounded during winning streaks. They shift your focus away from chasing every dollar and toward building consistency, discipline, and skill, the real sources of long-term profit. Chapter 10, Trading Psychology and Personal Survival. Lance Beggs explains that every trade tests your discipline, patience, and ability to stay calm under pressure. It's easy to stick to rules when trades go well, but what happens when the market turns against you? That's when the true trader shows up, either a professional who trusts the plan or an amateur who panics, second guesses, or does something reckless to win it back. A big lesson here is self-awareness. Knowing your own emotional triggers is just as vital as reading candlesticks. Maybe you feel a rush of greed after a few wins and start increasing your size too fast. Maybe a losing trade makes you angry and you jump into a revenge trade to get even, usually digging the hole deeper. Beggs points out that most blown accounts aren't caused by bad setups, but by emotional spirals that break all your carefully crafted rules. So, how do you build the discipline to avoid self-sabotage? One step is accepting losses as part of the business. Professionals don't fear losses, they manage them. Each trade is just one outcome in a series of hundreds. Focusing on process over profit helps you treat every trade the same, win or lose. Patience is another piece of the puzzle. Many traders know their edge but can't wait for the right conditions. They jump in too early or force trades when the market is flat. Beggs encourages building routines that slow you down. checklists before entry, brief pauses to double-check context, and rules for when not to trade at all. Stress management is critical too. Long hours, back-to-back losses, or feeling alone in your journey can exhaust your mind. Burnout clouds judgment faster than any bad market move. That's why Begg suggests daily habits that strengthen your mental game. Regular breaks, exercise, enough sleep, and hobbies outside trading to reset your brain. A balanced life creates a balanced trader. Recording your thoughts after trades also works wonders. Many traders focus only on price data, but ignore their own behavior. A short daily note on what you felt during each trade uncovers patterns. You'll see which emotions pop up often: fear, hesitation, anger, and can plan practical ways to handle them next time. One powerful tip is practicing mindfulness. A few minutes of calm, focused breathing every day sharpens your awareness. When a trade goes against you, that calmness helps you pause, accept reality, and react rationally instead of emotionally. Beggs also warns against overloading yourself with conflicting ideas. Pick a method you trust, master it deeply, and stick with it through ups and downs. Jumping from one system to another out of fear or impatience only guarantees confusion and inconsistency. Survival is the ultimate goal. A good mindset doesn't make you rich overnight. It keeps you in the game long enough to grow, adapt, and let your edge pay off. Most traders quit because their mind breaks before their method does. If you protect your mental state, you protect your capital and your future. So take a moment today to check in with yourself. Are you feeling steady and focused? Are you truly sticking to your rules when the market tests you? Are you resting enough to trade at your best? These questions matter more than any chart pattern. Chapter 11, Trading Platform Setup. Your trading platform setup can quietly make or break your focus and speed. A messy, cluttered screen creates hesitation and costly mistakes. A clean, smart workspace frees your mind to focus fully on the market. Lance Begg shares practical guidance on building a platform setup that supports sharp decision-making and smooth execution. First, let's talk about chart layout. Many beginners overload their charts with so many indicators that price action gets buried under lines and colors. But the market doesn't care about fancy visuals. It cares about order flow and human behavior. So Beggs recommends keeping charts as clean as possible. Let price be the star. If you use indicators, use only what truly adds context, like a simple moving average to show bias or pivot levels to highlight key areas. Nothing more than necessary. Next, think about timeframes. The YTC price action approach is deeply rooted in multi-timeframe analysis. So arrange your charts side by side. Higher time frame on the left, lower time frame on the right. This helps you read the broader market story and drill down to the precise entries without flipping through endless tabs in a panic. A quick glance shows you trend, structure, and immediate setups all at once. Colors and styles also matter more than you think. Use clear, contrasting colors for candles, lines, and levels. Avoid neon distractions. Your eyes should relax into the chart, not squint or get overwhelmed. Labels and zones should be easy to spot but not dominate the whole view. Now, workspace ergonomics. This is where your comfort comes in. Long trading hours can strain your eyes, neck, and back if your setup isn't ergonomic. Position your screen at eye level, keep your chair supportive, and set up good lighting to avoid glare. Small details like this keep you fresh and alert, especially during fast market moves. Hotkeys and order placement tools are another game changer. When you see an opportunity, you must act without fumbling. Learn your platform's hotkeys for instant order placement, modification, and cancellation. A few seconds saved here can mean the difference between a planned entry and missing the move entirely. Beggs urges traders to practice these actions until they feel automatic. No time wasted hunting for buttons or clicking through menus. Your watch list deserves careful thought too. Don't drown in too many charts. Choose a manageable set of instruments that match your trading plan and style. Fewer markets mean deeper focus and more familiarity with how each one moves. Next, consider your notes and checklists. Have a spot on your screen or a physical notepad beside you to jot quick thoughts, mark levels, or remind yourself of rules. Many traders get so caught up in the live action that they forget key steps. A visible checklist keeps you anchored to your process, even when emotions run high. One smart tip Beggs shares is the end-of-day review setup. Your platform isn't just for live trading, it's your lab for daily study. Keep folders for saved screenshots of trades, mistakes, and textbook examples. Reviewing these builds confidence and fine-tunes your edge. Finally, test your setup under realistic conditions. Open and close dummy trades, practice changing stops and targets quickly, and simulate how you'll handle sudden reversals. This dry run builds muscle memory, so when real money is on the line, your actions feel smooth and precise. Chapter 12, Trading Plan Document. Lance Beggs explains that a good trading plan isn't just a bunch of vague ideas scribbled in a notebook. It's a clear, structured document that outlines exactly how you'll trade, why you'll trade, and how you'll handle anything the market throws your way. It starts with defining your strategy. This means writing down your core setups in detail, when you'll enter, what you'll watch for before pulling the trigger, and how you'll manage each trade from start to finish. No guesswork. When the market moves fast, you shouldn't be asking, what do I do now? Your plan answers that for you. Next comes money management. Spell out exactly how much capital you're risking per trade, your maximum daily loss limit, and how you'll size your positions. This removes the temptation to chase losses or double down on hope. It's your guardrail, protecting your account and your mindset. Beggs also highlights the importance of daily routines. A professional trader doesn't just roll out of bed and start clicking buttons. Your plan should cover your pre-market checklist, reviewing key levels, checking for news that could shake price action, and mentally rehearsing your game plan. It should include your mid-session habits too, when to take breaks, when to step back if things get sloppy, and how to reset after a loss. Another critical part is your rules. These aren't flexible guidelines, they are commitments. For example, no trading during low liquidity times, no adding to losing positions, and always reviewing every trade at day's end. Sticking to your rules turns your plan from words on a page into a daily habit that protects you from impulsive mistakes. Beggs reminds traders to keep the plan personal. Don't copy someone else's word for word. Your plan should match your personality, your lifestyle, your tolerance for risk, and your chosen markets. A plan that doesn't feel like yours will quickly gather dust. When you write it yourself, every line carries your intention and discipline. One powerful point is that your trading plan is a living document. It's not carved in stone forever. Markets change, your skills grow, and your life circumstances shift. So revisit your plan regularly. After each month or quarter, check what's working well and what needs adjustment. Maybe you've found a new high-probability setup or a better way to trail stops. Update your plan to reflect these refinements. Beggs also suggests breaking your plan into sections for easy daily use. A short version, a single page, covers the essentials you look at before trading. The full version goes deeper into your system logic, contingency actions, and rules for rare situations. This layered approach keeps you quick and sharp during live trading, with the details available for study during your review time. It's normal to feel resistant to writing a detailed plan at first. Many traders think they'll remember everything in their head. But memory fades under stress, and emotions easily override logic. A written plan anchors you back to discipline when things get chaotic. Most importantly, your plan becomes your compass during setbacks. When you hit a rough patch, you don't drift aimlessly, blaming the market or bad luck. You open your plan, review your processes, and pinpoint exactly where you slipped. This habit transforms losses into lessons and small tweaks into big improvements. So, take an hour this week, sit down with a clear mind, and craft a plan that's truly yours. One that lays out your strategy, risk controls, daily rituals, and rules. Review it often. Evolve it as you grow. With this living guide by your side, you'll trade with clarity, confidence, and the steady edge that sets professionals apart from the crowd. Chapter 13, Procedures Manual. Trading success doesn't come from a single setup or a lucky streak. It's the result of daily consistency. Doing the right things over and over, even when the market tries to distract you. This is where a clear procedures manual becomes your secret weapon. It transforms your plan into practical steps you can follow every single day. Lance Beggs explains that a procedures manual is not a big fancy book gathering dust. It's a simple, direct set of checklists and steps you use before, during, and after every trading session. Think of it as your personal flight checklist. Pilots don't rely on memory, neither should you. It starts with your pre-session routine. This is your warm-up before stepping into the arena. Review your higher time frame context. What's the dominant trend? Where are major support and resistance zones? And are there any news events that could shake things up? Mark these areas clearly on your charts. Next, run through your personal condition. Are you focused, rested, and ready to trade with a clear mind? If not, it's smarter to step away than to force trades in a bad mental state. Now, as the market opens, your during session routine kicks in. This part of the manual keeps you disciplined in real time. It reminds you to monitor the price action without overreacting to every tick. Stick to your plan. Wait for setups that align with the story you prepared earlier. Use your hotkeys and platform tools confidently. When emotions flare up, like FOMO or fear, the checklist grounds you back to your rules. Another smart part of the live routine is keeping short notes as you trade. If you skip an entry, write down why. If you take an impulsive trade, note what triggered it. This habit sharpens self-awareness and makes your post-session review far more meaningful. Once the session ends, most traders shut the screen and forget about the day. But pros do a post-session routine that turns every trading day into a lesson. This is where growth really happens. Beggs encourages setting aside time to review each trade. Did you follow your plan? Did you break any rules? How was your mindset? Save screenshots of setups you handled well and those you missed or messed up. Your procedures manual should lay out clear steps for this review. For example, log each trade's context, entry, management, and exit. Write a short comment on what you did well and one thing to improve next time. Over weeks and months, these notes reveal patterns that textbooks can't teach. They show you, your strengths, your weaknesses, and how you react under pressure. Beggs also suggests using your manual to plan the next day. Update key levels, adjust watch lists, and mentally rehearse how you'll tackle similar scenarios tomorrow. This habit keeps you one step ahead of the market, rather than feeling surprised or caught off guard. One golden rule: keep your procedures manual practical. It should be short enough to follow easily, but detailed enough to cover the essentials. No filler, no fluff. A good manual lives on your desk or screen, ready for daily use, not hidden away in a forgotten folder. As you evolve as a trader, update your manual regularly. When you discover a better way to spot traps or refine your risk management, add it to the steps. This way, your trading process grows with you. Always clear, always relevant. A strong procedures manual removes decision fatigue. It frees your mental energy to focus fully on reading price and managing trades rather than second-guessing every move. It builds muscle memory for good habits. Over time, this consistency compounds into skill and confidence. Chapter 14, Journals and Spreadsheets. One of the biggest differences between struggling traders and consistent professionals isn't just better setups or a fancy broker. It's the habit of keeping clear, honest records. Lance Beggs believes a good trading journal and a performance spreadsheet can turn every win and every loss into fuel for growth. Without them, traders repeat the same mistakes and wonder why results never change. First, let's talk about the trade journal. Think of this as your daily trading diary. It's not just a list of trades. It's a mirror showing exactly how you think, decide, and act in the heat of battle. Each journal entry should capture the context of your trade. What was the market structure? What did you see that told you it was a valid setup? Where did you enter and exit? And most importantly, why? Writing down why you took a trade forces you to be honest. It exposes whether you stuck to your plan or got swayed by impulse or emotion. Over time, this habit reveals patterns that textbooks can't teach. Maybe you notice you rush entries right before major news. Or you see that you exit too early when price hesitates for a moment. These insights are gold. They show you exactly what to fix. Alongside your journal, Beggs recommends keeping screenshots. Save a picture of the chart at your entry, during the trade, and after exit. Mark up what you saw in real time versus what actually unfolded. This visual record keeps your memory honest. We humans love to rewrite stories in our heads. The chart never lies. Now, let's add the performance spreadsheet. This is your numbers dashboard. It tracks the cold hard stats: how many trades you took, win rate, win, average loss, biggest drawdown, and overall profit or loss. At first, this feels tedious, but it's the fastest way to see if your edge is real or just hope. Your spreadsheet should break down results by setup type too. This tells you which setups truly work for you and which ones drain your account. Sometimes traders discover they make money only with trend continuation, but lose it all trying to call tops and bottoms. Knowing this lets you double down on what works and ditch what doesn't. Together, your journal and spreadsheet create a feedback loop. The journal shows the story of each trade, your thinking and execution. The spreadsheet shows the scoreboard, whether your plan is profitable over time. Combine both, and you see the whole picture: the technical, the psychological, and the financial. Beggs stresses that this habit demands honesty. It's tempting to skip logging a bad day or fudge the reasons behind a trade, but cheating your journal cheats your growth. Traders who treat this seriously build self-accountability. They no longer blame the market or bad luck. They face facts, adjust, and come back stronger. One big benefit of journaling is emotional release. After a tough session, writing down what happened helps unload frustration and clears your mind for the next day. It turns a painful loss into a clear lesson. Many traders find that once they write out their thoughts, patterns jump off the page. Recurring impatience, chasing moves, or ignoring stop-loss rules. Beggs also recommends setting a regular time for review. Don't just write and forget. At the end of each week or month, sit with your journal and spreadsheet. Look for trends in your performance and behavior. Ask yourself, what am I doing well? What needs tightening? Which habits can I reinforce to push my edge higher? Over time, these records become your trading blueprint. They show your evolution from a beginner who guesses to a disciplined trader who tweaks, tests, and improves continuously. They remind you that mastery is not about avoiding mistakes, but about never repeating them blindly. So, if you haven't started yet, today's the perfect day. Open a notebook, create a simple spreadsheet, and commit to recording every trade honestly. Chapter 15, Trader Development Journey. Beggs reminds us that every trader's journey is a long road with bumps, wrong turns, and sudden breakthroughs. Understanding this journey helps you stay patient and committed when the path gets rough. At the start, every trader feels excited and hungry. There's hope in every candle and confidence that big profits are just around the corner. But reality soon humbles everyone. Beginners quickly discover that knowing when to enter is only a small piece of the puzzle. Staying disciplined under pressure, handling losses, and adjusting to changing markets are far bigger challenges. Beggs outlines the typical stages traders go through. The first is the unconscious incompetence stage. You don't know what you don't know. In this phase, losses feel unfair, and many blame brokers, news, or market makers. But deeper down, the real cause is lack of skill and a shaky plan. Next comes conscious incompetence. Now you realize you're missing something. You start seeing patterns in your mistakes, chasing price, moving stops, ignoring context. This is the most frustrating stage. Your awareness is growing, but your performance might get worse before it gets better. Many quit here, believing they just aren't cut out for trading. Then comes conscious competence. Here you've built a decent plan and learned to follow it, but you must focus hard to avoid slip-ups. Emotions still test you daily. Discipline feels forced, like you're battling your natural instincts every session. But this is also when small, consistent profits appear, giving you proof that mastery is possible. Finally, there's unconscious competence. By this point, following your plan and reading the market feels natural. Decisions come quickly because experience has trained your mind to process subtle clues automatically. Discipline is no longer a battle. It's who you are. Getting here takes countless chart hours, honest self-review, and a humble attitude. Beggs points out that this journey isn't a straight climb upward. Traders hit plateaus where progress stalls or they backslide into bad habits. The key is not to panic. Instead, review your journal, tighten your procedures, and accept that setbacks are part of growth. One step back often leads to 2 steps forward if you learn the lesson. Mistakes are your best teachers. Each loss shows a crack in your plan or your mindset. Embrace them instead of fearing them. Many beginners waste time chasing a holy grail strategy that promises zero losses. But seasoned traders know that perfection doesn't exist. Consistency and resilience do. Another point Beggs makes is about expectations. Many traders aim to quit their jobs and live off trading profits within months. This unrealistic goal adds pressure that often leads to reckless risk-taking. Instead, focus first on building a solid routine, protecting capital, and staying in the game long enough for your edge to show up. Income follows skill, not the other way around. Keeping motivation high during the ups and downs is vital. Celebrate small wins. A week with disciplined trades, a month without breaking a single rule, a clear improvement in reading market context. These milestones matter more than a lucky winning streak. Beggs also stresses surrounding yourself with supportive traders or mentors, if possible. Trading alone in silence can amplify doubts. Sharing experiences, mistakes, and insights with a small circle helps you stay grounded and reminds you that everyone wrestles with the same challenges. Chapter 16, Learning Process Principles. Lance Beggs lays out clear principles that separate random practice from the kind that actually sharpens your edge session after session. First, it starts with deliberate practice. Many traders believe that staring at charts for hours will magically make them better. But without structure and intent, that's just screen time. Deliberate practice means each session has a clear focus. Maybe today you work on reading trend strength, tomorrow on recognizing traps, and next week on refining exits. Each drill targets a single piece of your craft until it clicks naturally in real-time action. Beggs reminds us that repetition alone isn't enough. If you repeat poor habits, you simply get better at making the same mistakes. So he suggests building feedback loops into your practice. Review screenshots, journals, and recordings of your trades. Spot where you hesitated, rushed, or misread context. Use that feedback to design tomorrow's practice focus. This loop of action, review, and adjustment turns random effort into steady improvement. Another key idea is chunking. Trading is a complex skill, too big to master in one bite. Break it down. For example, isolate how you mark support and resistance, then how you judge trend quality, then how you manage entries. Tackle each chunk until it's second nature, then piece them together into your live routine. This makes the learning curve feel manageable, not overwhelming. Structure is your ally here. Beggs encourages traders to keep a practice log. Treat it like a flight plan for each session. Write down the skill you're targeting, how you'll measure success, and when you'll review results. This habit keeps your practice sessions sharp and purposeful, rather than drifting aimlessly from one chart to the next. One overlooked part of effective learning is taking breaks. Intense focus is powerful but exhausting. The brain needs recovery to lock in new patterns. Short breaks between study bursts, enough sleep, and stepping away from screens help your mind process lessons in the background. Traders who burn the midnight oil nonstop often hit mental walls that no indicator can fix. Beggs also talks about incremental progress. Don't expect to leap from beginner to pro in weeks. Small, steady improvements add up. Celebrate each milestone, like spotting a fake out before it traps you, or staying calm when a trade needs more room to breathe. These wins build the confidence that fuels the next level of practice. Getting feedback from other traders or mentors can speed up this process. Sometimes we're blind to our own errors. A fresh pair of eyes, or a trusted trading buddy, can point out blind spots you miss every day. Beggs suggests sharing journals, screenshots, or even discussing trade ideas with others who understand your approach. It's not about copying trades, but sharpening each other's edges. Another important piece is reviewing mistakes without blame. Traders often get emotional reviewing losses, but mistakes are gold mines of insight if you keep ego out of the way. When you slip up, ask, what was I thinking at that moment? What did I miss in the context? How can I spot that clue next time? This attitude turns pain into progress. Beggs warns against comparing your speed to others. Some traders click faster with market structure. Others need more chart time to read traps intuitively. Comparison kills motivation. Your only real competitor is yesterday's version of you. If you practice smartly, review honestly, and stick with it, you'll keep climbing your personal learning curve. Finally, remind yourself that learning never stops. Even top traders revisit old concepts, refine techniques, and adjust to changing markets. Complacency is the enemy of consistency, so keep your mindset hungry, your practice deliberate, and your feedback honest. Chapter 17, Taking Action. Many traders get stuck at the stage where they read countless books, watch endless videos, and fill notebooks with plans, but hesitate when it's time to execute. They're chasing the illusion of certainty before they act. But Beggs reminds us that mastery comes after action, not before it. He lays out a clear progression plan for building skill through phases. It starts with structured simulation and study. Use replay tools, bar-by-bar training, or even paper trading to drill your setups. This safe practice environment lets you test your reading of context, entries, and exits without risking money. It also sharpens your reaction speed so that when live money is on the line, you don't freeze or second guess. Once comfortable with the basics, step into live markets, but with tiny size. The goal is not to get rich overnight, but to train your mind to handle real emotions and uncertainty. Small stakes keep fear and greed manageable. Every trade you take under real conditions deepens your experience faster than another theory book ever could. Beggs encourages traders to scale up gradually. Jumping from micro size to huge positions rarely ends well. Build a track record of disciplined execution first. Prove to yourself that you can follow your rules, handle losses calmly, and adapt when conditions shift. Only then does increasing size make sense, and it feels far less stressful because your confidence is grounded in hard-earned competence. Another piece of taking action is committing to daily process goals. Instead of obsessing over profits, measure success by asking, did I stick to my plan? Did I wait for high-quality setups? Did I review my trades honestly afterward? Focusing on process turns your attention away from short-term wins and losses and toward building long-term mastery. Beggs highlights that traders often sabotage themselves by wanting results too soon. He reminds you, this is a marathon, not a sprint. There's no shortcut to internalizing the reading of price action and managing your mind under pressure. The only path is to show up daily, do the work, and trust that improvement compounds over time. Accountability also boosts action. Beggs suggests writing down clear goals for the month or quarter, which setups to master, how many high-quality trades to aim for, and how to handle specific recurring mistakes. Post these goals where you see them daily. They serve as a compass when distractions and doubt creep in. Also, don't hide from your errors. Each mistake is a lesson. Instead of feeling ashamed, analyze it. Did you break your plan? Did you misread context? What tiny adjustment can you make tomorrow? This relentless review and tweak cycle separates traders who grow fast from those who stay stuck. Equally important is nurturing a mindset that forgives imperfection. No trader, not even veterans, nails every trade. You will have drawdowns, emotional slips, and days when the market humbles you. The key is to bounce back quickly, refine your process, and get back in the game wiser than before. Beggs urges every trader to remember why they started. This journey demands time, money, and mental energy, so keep your vision alive. Maybe it's financial freedom. Maybe it's mastering a craft that challenges you like nothing else. Whatever your reason, remind yourself daily, especially on rough days. The essence of this entire framework circles back to one word: context. Price action on its own, bars, candles, patterns, is just data. It means nothing if you can't read what's happening around it. This book has drilled into you that every trap, breakout, and pullback must be seen through the bigger lens. Who's trapped? Who's strong? Who's weak? And where the path of least resistance lies. Understanding context separates the random clicker from the trader who thinks like a market detective. But context alone won't carry you if your mindset betrays you. Beggs reminds every trader that psychology is the heartbeat of consistent execution. The best setup means little if fear freezes your trigger finger. The cleanest trend can ruin you if greed blinds you to an exit signal. Your own thoughts and emotions will challenge you more fiercely than any market ever could. Mastering them is non-negotiable. And yet, even mindset is only part of the puzzle. What keeps everything alive is continuous development. There's no finish line where you get to say, I know it all now. Markets evolve. So must you. One month you refine your trap entries. The next, you work on letting winners breathe longer. Next year, your routine or tools might need an upgrade. The point is to keep learning, keep testing, keep journaling. Small, steady tweaks shape you into a trader who can survive any market condition. Beggs drives home that there's no hero to rescue you if you get lazy. There's only you, your plan, your notes, your screenshots, and your own brutal honesty about what's working and what's not. You must become your own coach. Praise your good calls, diagnose your slip-ups, and set new goals every week. This self-coaching habit is what turns theory into profit. Equally, he encourages you to adapt. Don't follow this book blindly as if it's gospel. Treat it as a foundation, then shape it to your own strengths and weaknesses. Maybe you prefer tighter stops. Maybe you love traps but ignore range breaks. That's fine. The goal isn't to copy Beggs step by step, but to build your version of price action mastery, grounded in timeless principles but flexible enough to evolve with you. Another timeless reminder: focus on process, not outcome. Every trader dreams of big profits, but money is a byproduct of executing well. If you chase dollars, fear and hope cloud your decisions. But if you chase precision, patience, and context, the dollars eventually chase you. He closes with a note of encouragement. Most traders quit because they expect overnight success. The real winners are those who treat this as a lifelong craft. If you stick with it, show up daily, and refine just a tiny bit each day, your growth curve will surprise you. Consistency is built in small, imperfect, relentless steps forward. So here's the final push. Don't wait for the perfect day to start applying all this. Take what you've learned, review your plan, mark your charts, and trade tomorrow with intention. Log it, study it, adjust it. One trade, one session, one tweak at a time. That's how a real price action trader is born. If you enjoyed this journey and learned something valuable today, please like, share, and subscribe to the channel. It really helps us grow and keeps this trading knowledge flowing to more aspiring traders like you. Drop your thoughts and questions in the comments. I love reading them, and I'm always here to help you on your trading path. Until next time, trade smart, stay patient, and remember, you are your best trading edge. Take care and happy trading, friends.